Hello, traders. It's Sunday evening, May 16th. I'm doing a little research to set up my week. Let's take a look at the market. Let's see if we can find a stock that we like. See if we can get a trade off Monday morning. You can see that the market's been in this choppy, upward sloping channel. Every time we get to the top of the trading channel, we have a round of profit taking. And you can see that's exactly what happened last week. But the market rebounded very nicely off the 50-day moving average. 50-day moving average tested here in January, tested again in March, tested again in March. Every time it has been able to bounce off of that 50-day moving average, and we get nice buying afterwards. So we have to wait for these dips, and that's exactly what we did this week. We were waiting. We could see how the market was compressing. Tons of great news, great earnings, great economic releases, dovish FOMC meeting. Nada. No rally, no breakout. Tiny little doji bodies here, meaning that the close was near the open. Very light volume rally. That's not a good sign. That tells me that buyers have very little conviction near the all-time high. Back in here, remember, we had so many good things that were starting to happen. Coronavirus cases were subsiding. Everybody was excited about the economy getting reopened. We had stimulus bill going to be signed. We had upcoming earnings season. Everything was looking really, really good. And this had the potential to be a buying climax. It never materialized. That tells me that this little round of selling right in here, we're probably going to get back to the high, but we're not going to be able to get through it. There's simply not enough gas left in the tank to push us through to a new all-time high. I believe that this summer we're going to see a fairly narrow trading range between SPY 420 and 400 with a lot of chop back and forth. Signs of inflation are starting to pop up. We've seen that in lumber prices, oil prices, iron ore, copper. All the grains are trading very, very high. So all the commodities, all the agricultural stocks are doing great. That, unfortunately, is due to supply disruptions. We're seeing prices climb quickly. Might that hamper economic growth? It could. We saw retail sales was flat last week. They were expecting a 1% rise in retail sales. Where's all this pent up demand? We know there's a lot of cash on the sidelines. Also, we had consumer confidence come out Friday, much lower than expected. The unemployment report, yes, it was weak. I'm not buying it. I think the ADP report was much more reflective of what's going on in the labor market. We've also heard that McDonald's has raised their minimum wage to $16. They can't find workers. Also, in the last unemployment report number, we know that hourly wages went up 0.7%. Wages are the largest input cost for companies, so they're going to have to start raising their prices. All of this is very inflationary, and the big question is, has the Fed been too conservative in their inflation estimates? We'll see. Right now, bonds have been dropping, and we'll put up the TLT. You can see we had this nice little bounce in TLT, upward sloping trend line breached to the downside. This could be a bearish flag formation. There's your flagpole, there's your upward sloping trend line, getting ready for another leg lower. I believe that inflation is going to keep pressure on the S&P 500. Traders are going to be relatively passive. They'll wait to see how this quarterly earnings turns out. They'll also wait to see just how hot inflation gets and what the Fed's reaction might be. We also have the coronavirus spreading globally. That is going to slow global economic growth. So we don't have the same level of excitement here. The air has been let out of the balloon. I don't think we're going to see this pattern when we get a dip and an explosion higher, dip and explosion higher. I think we come up and test the high. I don't think we're going to be able to break through it though. So lots of little speed bumps and little signals that are out there that tell me that all is not well. FXI, that is the Chinese market. They are in bear market territory. What the heck? How could they be in bear market territory? A 20% correction off the high. Their economy has an 8-month head start on us. They got through the coronavirus much earlier than everyone else. So why is the global growth engine, why is their market down 20%? That's a big red flag to me. So I'm still cautious. I think that the market's going to be in a trading range. I'm not bearish, but I'm also not going to chase stocks. And it wouldn't surprise me for us to flounder around and test the support from last week. I know that the S&P 500 is up about 7 points overnight so far. So we've got nice little positive price action, and we've had a couple of decent days here recently. I'm not chasing. We were able to put 5 of 6 bullish put spreads on last week. Very happy with those positions. All of them are performing well right now. The reason that we're selling out of the money bullish put spreads is because we want to take advantage of accelerated time premium decay, and given my market bias, the fact that we're going to be choppy back and forth, no upward momentum, that gives us some cushion so that if we do get a market pullback like this and a retest of that support, we're going to be okay because we are in stocks with relative strength, and those stocks will hold up better than the market, and those bullish put spreads will stay out of the money. That's the plan right now. I think that's going to be the best strategy, but you must wait for the market pullbacks, the dips. As soon as you get those dips, you've got to be ready to fire those orders. So let's take a look and see what we've got that might be of interest to us. You know, my favorite swing trading search is Pop Bull. So let's click through and take a look at a few of these stocks. RRC, beautiful breakout here. Love it. That could be an excellent pick. We've already got energy stock that we're long, or we're short a bullish put spread, I should say. So I'm not going to take RRC as a trade. STX, what a monster day on Friday. Relentless buying. So this stock is likely to go higher. Look at that. We had a lot of traders on that Friday. This is coming up on a lot of our searches. BCRX, decent looking chart. Nice grind higher. Kind of like it. You've got this upward sloping trend line, but it's a cheap stock, so we can't get any premium on an $11.50 stock. So we're going to have to take a pass on that. GPS earnings coming up. We know that from the E on the end. LB earnings coming up. No interest. Caesar, a little bit too choppy. I do like this upward sloping trend line though. And the 50-day moving average, 100-day moving average there, the 50-day moving average there. Yeah, selling a bullish put spread below that 87 strike, that could work, so that's interesting. NTNX, I like this horizontal compression and this breakout here, so that actually looks pretty decent. I'm not going to do a bullish put spread on it, but I do think, given that it's above the 100-day moving average, this could have set up well for a day trade Monday morning. SCHW, Charles Schwab, tight compression, breakout through the upper end. Yeah, this is actually a very decent looking stock. Facebook, probably the strongest of the tech stocks. Double bottom, higher low, upward sloping trend line, 50-day moving average holds. Love the price action on Friday. If you compare Facebook to Microsoft, Amazon, Apple, Google, Facebook is the strongest of the three right now. So yes, that one's nice. Deutsche Bank, I love this. Breakout here, able to hold the gains, nice compression. Now we're breaking out to a new high. If you're looking for a cheap little stock to own, I like Deutsche Bank, but there's one that I like better, letter C, because we've got some out of the money bullish put spreads that we can consider here. You can see very tight compression, financial stocks doing very well, poking through the upper end. I've already shown you Charles Schwab, Deutsche Bank, and now Citigroup. All the bank stocks are doing well. Lower bonds mean higher interest rates. Higher interest rates mean that banks have a chance to make more money. We know that the savings rate has been way up over the course of the last year. $2 trillion sitting on the sidelines. Banks are going to be able to make some money in a higher interest rate environment, so they're doing very well. Plus, a growing economy is always good for banks. People having jobs, good for banks. That means that their bad loan write-downs will be smaller. So this is what I'm looking at. I like Citigroup, and I like that 50-day moving average comes into play at 72.75. I believe the upward sloping trend line, which comes into play at about the same level, is going to hold. I believe the 50-day moving average is going to hold. In fact, the stock is breaking out to a new closing high. I believe that it continues to grind higher. As it does so, it will provide us with more and more cushion on our bullish put spread. Let's put up the 1 OSI indicator. You can see orange line above 0 equals relative strength. Volume pretty decent also. So I'm going to go out to the June expiration, the June 11th expiration. Financial stocks don't move much. They don't have a lot of volatility. So you've got to go fairly close to the money. If I go out to the 72.50 strike price, remember that's right at the 50-day moving average. Let's just move down. 72.75 is the 50-day moving average. You'll also notice blue dotted line, 2 standard deviations out of the money. Nice, that increases our probability of success. Sell the 72.50 puts, buy the 71.50 puts. Do that for a credit of, I have $1 between the strike prices, so I like to get 20 cents when I do that. We're going to do one contract, and this order is going to be in staged orders. For those of you who are Option Stalker members, I like this trade. We're going to try and get it done tomorrow. But Pete, I don't think we're going to be able to get that spread done. It's 13 cents bid, offered at 24. You're right. We're going to need a little help from the stock. We're going to need a little help from the market. I am not chasing anything. We're going to have plenty of opportunities to get our trades done. We were patient. We waited for the dip that we got last week, and then we fired. And that's what we're going to do again. We're going to wait for that dip. When it comes along, we're going to take advantage of it. We're going to look for stocks with relative strength. If I put the SPY overlay up, market down, down, down. Stock flat. That is relative strength. That is our edge. That is what I teach every day. Thanks so much. Have a good trading week. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.